Welcome, everyone, and thank you so much for joining us today. My name is Susan Welton, Oracle Marketing Manager at Perficient, and I'm excited to be moderating today's webinar on how Noble Energy automated reconciliations with Oracle Account Reconciliation Cloud Service. We're very fortunate to have Matt and Joel with Noble Energy on the call today. We've got Hanny, our Practice Director at Perficient, and Tim with Oracle also on the call. Just going to give you a brief overview of what we're going to touch today. We will have introductions. Hanny will speak to Perficient. He'll walk you through a little bit about our company. We will have Hanny and both Tim speak to Oracle Account Reconciliation Cloud Service. And then we will hand it over to Matt and Joel to talk about Noble Energy's cloud story. We will wrap up today with a Q&A. So by all means, make sure that if you have questions that arise, that you go ahead and jot those down and send those to us. Now, time permitting, we'll have a Q&A session at the end of today's event. So please make sure that those questions, like I said, as they do arise, you put them in the Q&A tab in the chat window there, and we will get to those as soon as we possibly can. 2 questions always come up with our online events. Can I watch the web seminar again? And can I get a copy of the slides after the presentation? Both will be available to you, and we will make sure that all registrants do receive a copy. So without further delay, I'd like to introduce today's speakers, Matt Dossett, Joel Niemeyer, Hanny Shinar, and Tim Gomo. Matt is Senior Accountant in the Corporate Accounting team at Noble Energy and manages account reconciliation process. Over the past decade, Matt has worked in a variety of accounting roles in the Houston oil and gas companies. He's an active CPA and has experience working with ERP systems and P2. Joel is a team leader in Noble Energy's Enterprise Applications Group, leveraging technology to deliver compliance-focused solutions for Oracle ERP across the audit and financial reporting functions. Hanny is Director in Perficient's Enterprise Performance Management Practice. For the past 20 years, Hanny has worked with his clients to implement various ERP, EPM applications, helping to transform their financial solutions. He has extensive experience with business process analysis, business process reengineering, and program management. He is a 10-year veteran in the Oracle EPM space and an expert in the Account Reconciliation Cloud Service application. Rounding out our speakers today is Tim, who is Director of the EPM Product Management team at Oracle. His primary focus is on the account reconciliation and overall close management challenges that enterprise face every day. Tim has more than 20 years of experience in the financial close and account reconciliation space. To all of our speakers, welcome. Very happy to have you here with us today, and I'm going to hand it over to Hanny to take it away.
Thanks, Susan, and thanks to all for attending today. I realize you guys have busy schedules and appreciate your time and attendance and joining to learn a little bit about the ARCS implementation at Noble Energy. I want to give a special thanks to Tim, Matt, and Joel for speaking today, and more importantly, really Noble allowing Perficient to deploy a successful account reconciliation implementation at Noble. I want to start out before we actually get into the slides, and we want to start out and just do a quick poll. So which one of the following cloud offerings is your organization currently considering? So if you guys can click the appropriate checkbox and submit your answers there. And so looking in, so we'll see that account recs, quite a bit, 63% looking to learn a little bit about account reconciliations, a little bit of enterprise planning and budgeting, financial close. And so unfortunately there's a little bit that have no cloud strategy at this point, but the good thing is we're here to talk about account reconciliations, and that's what the focus of the actual webinar is going to be. So continuing on. And so I want to dig in a little bit on Perficient. So Perficient is a leading digital transformation consulting firm serving the Global 2000. We provide technology and management consulting as well as creative consulting as part of our digital agency. We'll talk about some of those areas as it relates to this webinar. Drilling down a little further about Perficient, we are a publicly traded company trading on the NASDAQ under the ticker symbol PRFT. Last year we did almost $500 million, so $485 million in revenue last year. and have approximately 3,000 colleagues worldwide. We do have multiple technology partnerships, but today the focus is exclusively on our Platinum partnership with Oracle. Our Oracle relationship spans about 17 years, and as the shift to cloud has come about, we are an Oracle Cloud Select partner with 15 distinct specializations. One of the key takeaways from this slide for us is our 95% repeat business rate. And really what that means for us is that 95% of our revenue comes from customers we've done work with in the past. That's a good indicator that we're doing something right, and very key metric that our executive team watches. So drilling in our Oracle capabilities, we do have a comprehensive Oracle partnership with capabilities that span Oracle's 4 main pillars. Today we'll focus on EPM. That's where the account reconciliation application falls into. As many of you guys, the EPM space was the legacy Hyperion applications. We also do ERP, where we focus on cloud ERP as well as the e-business suite applications, Oracle BI, and then last but not least, we do cover the customer experience. As you can see, our 15 specializations do span across various verticals. Noble Energy falls underneath the energy, oil, and gas space, obviously. We have over 3,000 deployments under our belt, and we do consider ourselves the go-to partner from an Oracle perspective in North America. So drilling down on our EPM practice, which is the team that I'm part of, all of our account reconciliation projects fall under this team. As we look at the shift to the cloud, there's a lot of experience we bring to the table from an ARCS perspective, as well as the other applications under the Oracle umbrella. We cover from strategy engagements, chart account redesigns, full lifecycle implementations, education, training, formalized post-implementation support. We really cover the full gamut, soup to nuts, in the EPM space. From an education perspective, we are an authorized Oracle Education Center. We cover the full Oracle University curriculum at our training center in Houston. We can have our team deliver training, in Houston or on client sites at your location, whether it's instructor-led, custom built on your specific apps or processes, live virtual classes. We can help your org in all aspects of training and change management. And so without further ado, I'm going to go ahead and pass over to Tim Gomo to talk about Oracle Account Reconciliation Cloud Service and really how it fits into the financial close process in EPM.
Thanks, Hanny. Yes, exactly right. Wanted to give a little bit of an overview before we got into details of the deployment so you can kind of get a feel for where Account Rec sits in the Oracle ecosystem. So whenever I talk about the product, the focus on Account Recs, I always back up to the highest level, right? The complete financial close process. And when you think about that, this slide's not meant to represent a perfectly linear operation. We certainly understand that all these things are going on in parallel from, closing the subledgers, all the general ledger activity, consolidations happen, reconciliations happen, internal reporting, compliance, there's tax activities, lots of different things going on in the close process at the same time. And so at Oracle, when we think about all those activities that are going on, I always like to map it back to the solutions that we offer as well. So if I click through to the next, you can kind of see the overlay of the offerings that Oracle has in this space, from cloud financials for the ERP to financial consolidation and close, which is our task manager and consolidation offering for that portion. Of course, step 4 there, we've got the account recs that we're talking about today. Enterprise performance reporting for all of your filing to the SEC and XBRL tagging and all that good stuff, and then of course tax as well. So lots of different products covering the entire financial close, and I think that's an important point to make before we dive into the details about the ARCS service. So ARCS itself, we've designed it in really two main feature sets, if you could think of it that way. When you think about your reconciliations, let's say you have 100% of your balance sheet covered. You have all these reconciliations that you're responsible for. There's a certain percentage of those reconciliations that are higher volume, more complex. You need a little more help performing those reconciliations than otherwise, right? So what we've done is for all the balance sheet reconciliations, we have a process called reconciliation compliance. And reconciliation compliance, like I said, helps you manage all of those reconciliations, whether they're a couple transactions a month, could be zero balance with no activity, could also include the high volume reconciliations. But reconciliation compliance is the process that really focuses on managing that overall compliance that I need to achieve. Transaction matching is focused on a subset of those reconciliations. So again, if you take 100% of your reconciliations you're responsible for, depending on your business, it could be 5, 10, 20% of those reconciliations are difficult, higher volume, more complex. Certainly retail customers, a lot of the financial institutions we work with, they have a lot of reconciliations that need to be done that are complex, sometimes every day, sometimes once a month. So that's really where transaction matching comes in. It helps out with the heavy lifting on those more difficult reconciliations. And then of course at period end, whatever your period end may be, typically it could be monthly, but recs can be quarterly, they can be annual, just depends on how you configure the tool. That's where the reconciliation compliance part really hooks in and helps manage that entire process. One other thing I did want to mention too is within ARCS, we do have other processes covered as well. For example, you can perform variance analysis. I have a lot of customers that will look at reconciliations at a certain level, but then variance analysis might be done at a higher level or even lower, just depending on what your requirements are. And those workflows and processes around variance analysis can be done as well. Consolidation check is another one that I've seen where customers want to compare the balances that they're using in their consolidation tool to the balances that we're using for the reconciliation. Just making sure that things are aligned there obviously is important. And then any other local GAAP stat, IFRS, RECs, everything is really covered under the one umbrella of the account reconciliation tool. Okay. And Hani, you were going to speak to this slide, I believe?
Absolutely. So the ARCS application is designed to manage your global reconciliation process. So it's soup to nuts, bringing in data from your general ledger and subledgers to do those reconciliations. It provides real-time metrics into your actual reconciliation process. So as recs are being closed, you get the visibility up to date of where you are at any given point in time. It lets you create workflow engines to route reconciliations for approval. We recommend a risk-based approach where you're classifying high, medium, and low risk. And you can create different approval levels for each of those different risk ratings that you'd assign. It allows you to assign them to individual users or teams of users that can actually take action on the reconciliation. You create a workflow where preparers can prep the recs. The tool will create full automation to load data from general ledger and subledger, as well as providing drill back to those source systems. And then, it gives you that process optimization. So all the prep time that a lot of our customers have in a manual Excel process goes away. All that data where you're extracting data and plugging into an Excel sheet and summing to get your balances, that goes away and it becomes a full optimized, automated solution. It is flexible. It's robust. It's user-owned. There's tons of pre-built, out-of-box compliance dashboards where you can go through on a user-by-user basis, see the recs that are submitted on time, what's late, what's been rejected, how many were auto-reconciled. It integrates directly with your transactional systems, and there's pre-built connections to cloud ERP as well. But now I'll go ahead and transition over to, so let's do another polling question. So I know we said that in the first poll there was roughly 63% of folks that were looking at the account reconciliation process. What are some of the challenges you're facing today with your current process? You guys can go click on the check boxes. So time wasted tracking data in Excel, resources are stretched thin, that's a big one. Lack of visibility is coming up, incomplete information. And so it looks like the vast majority is tracking data in Excel. And again, the visibility is a huge one for us. The compliance dashboards really do solve a lot of those issues. And from a data perspective in Excel, the automation helps tremendously where you're actually looking at data and analyzing it rather than trying to prep and load data. And so I'll go ahead and pass the mic over to Matt and Joel, who'll talk about the Noble story.
Good afternoon, everyone. Thanks for joining. This is Matt, and just want to give you guys a quick overview of Noble Energy. Noble Energy has been in operations for over 85 years, and we operate in our core areas, the DJ Basin, Permian Basin, Israel, and as well as EG, and then we also have operations in other non-core areas. As far as the reconciliation program, our current process, or our old process, was that we would do all of our reconciliations within Excel, and then we would load the reconciliations into a program called FileNet, where it was more of like a repository. So a lot of our challenges that we faced were things like, because we were working in Excel, balances would not load directly from EBS. So when we had gung-ho users that would want to start working on their reconciliations, if a balance changed afterwards, we didn't know until after the fact. Also, the workflow, there was a very manual process where people would have to select their approvers and manually route reconciliations over to their managers for approval. And also the big key hitter was completeness. Because the process was very manual, there was a check that we would have to manually do just to make sure that every reconciliation was accounted for. And sometimes that process would take 3 to 4 hours just to find the reconciliations. As reconciliations were saved into the repository, they may not have the same name as what the account was labeled as. And so trying to find reconciliations at times was very difficult. And so we were looking for basically a program that would streamline our process, one, have a better workflow program, as well as allow us to check for things like if a balance changed or if there was a missing rec. And so that's what led us to work on this implementation project. And I think Joel's going to take over, and he's going to talk about the timeline and the scope.
Hey everyone, good afternoon. So I will start by taking us through the timeline. For this project, I was the technical lead for Noble. We started, given the challenges we just heard, we started with product selection about June or July of last year. Selected Perficient shortly after that, and we formally kicked off, I guess, in October with some design requirements gathering. Build actually started in late October, November, and I think we were pleased to discover how configurable ARCS was to meet what I think inevitably becomes a host of design requirements. So for example, using the multiple reporting currencies in ARCS, we were able to provide both local reconciliation as well as our obviously required US dollar reconciliations. We're also able to use the embedded FDM as well as the summary reconciliation functionality to provide different levels of reconciliation roll-ups for our different teams. So as build commenced through, well, I guess what would be considered the holiday season, we started staggering training and testing, wrapping that up in February of this year with a full cutover for our first Q1 reconciliation, which I think we actually just completed. So I'd say, maybe the takeaway from the timeline is that with the Oracle's cloud service, we're able to effectively roll out an accelerated implementation. And with their intuitive user interface and reconciliation process, really has led to accelerated user uptake also. So specifically for our project, we'll talk a little bit about what we implemented and some of the big wins that we have started to experience. We implemented the transaction matching module, which I think we heard a little bit from Tim. We load, I guess, a subset of transactions that we're interested in. In our case, we are matching our intercompanies, payables and receivables, and then those will go through the auto-matching rules that we've defined. Again, like Tim said, this is great for a high-volume process, as this is, and it results in a high degree of accuracy for us validating our intercompany journals. Reconciliation compliance is the module that I think we've experienced some big gains in. First off, with the automated data integration for both General Ledger and Subledger, including the ability to drill back on both. One of the issues, as you heard, that we had was being able to standardize the source of our data. I think we discovered that everyone had a different sense of what Subledger actually was, whether it was running some report, some transaction register, some aging report, and essentially calling that their Subledger support. So being able to actually extract data from Oracle EBS into ARCS gives us complete GL visibility and really provide everyone's data in the same format, following the same process, the same, I guess largely the same workflow engine, and provides us, the ability to create a standardized, repeatable process that, can essentially an auditable process. And finally, for application administration, consistent with Oracle's cloud strategy, we're essentially kicked out of the environment from an IT perspective. So hands-off patching, hands-off upgrades, hands-off infrastructure. With the data automation piece, they've provided tools with the embedded FDM for us to, once we have defined an extract from Oracle, to automatically stage and load that data into ARCS, as well as providing visibility into the level of data, the level of reports, the level of attestation that we need to provide exception reporting. And again, with, as their other cloud services are, supports the standard cloud features so that we can align the user look and feel, as well as the security policies. You see SSO on the slide, to our corporate policies for our other applications.
Hey, Joel, can I add a couple things? So one of the things I want to point out here on this slide, guys, is when you think about the legacy Hyperion on-premise applications, the only drill through that was supported was to General Ledger. In the cloud offerings, we are able to drill back into the actual subledger, so AP, AR, fixed assets, cash. So it is added functionality that allows us to drill into transactional detail at that subledger level. From an auto reconciliation perspective, we're able to go in on a rec-by-rec basis, configure reconciliation rules to check for things like, okay, do my balances match, or is there a variance within a 5% threshold or a dollar amount that I can live with. There are functions to create journals that can be created in the ARCS application and then fed back into your source ERP systems. You can create action items for journals that need to be reversed and things like that. We're loading data on a nightly basis, so balances were coming in and updating, and if there was a rec that was previously closed, when that balance changed, it would reopen that rec and notify those users. So there's an embedded workflow and notification engine where emails would come out saying, this rec was closed, it's now open, please go back and take action because the balance has changed on it. And then when you look at your compliance dashboard, there's a lot of benefits and gains where you can actually go in and see exactly what was auto-closed, what has been reopened, what was submitted and what work is really remaining. It gives you flexibility to create warnings. So if you have an account that's supposed to be a debit balance but a credit shows up, it warns you. It's going to tell you that, hey, you need to take a look at this account. There might be an issue there. As well as aging violations. You can create aging violations that say if there's an entry that needs to be that should be reversed in, say, 60 days, it would give you those warnings that you have a violation coming up within that time frame. But again, from a benefits perspective, the data automation is huge. All that prep time of creating the manual reconciliations essentially goes away. And that's a lights-out, fully automated integration with drill back into the subledgers. And so really the teams are focused on the actual recon process rather than trying to spend so much time prepping the actual reconciliations themselves. And then from an infrastructure perspective, that goes away as well. That's all handled by Oracle. All you do is define your maintenance window, right? And so you say that I want it at 3 o'clock in the morning, and all that patching and updates happens through the Oracle service.
Okay, we will take it on to Matt with really highlighting a couple of our project outcomes here.
Thank you. So now that we're live, we've actually gone through our first round of reconciliations. We believe we have somewhere around 126 users preparing close to 5,000 total reconciliations each month. And we actually just finished our reconciliations yesterday, and our requirement is usually day 10. So finishing on day 11 on your first go-around, I think is pretty good. Speaking with the people that have been doing most of the reconciliations, a lot of them have been very excited about the tool. As far as comments, the only complaints have really been centered around just the change itself. And so we, as a whole, we're guessing right now. We can quantify later once we have a little more data, but we're probably saving somewhere close to 30% of our time just doing the automated reconciliations. Also, as far as accounts that we would normally or typically look at, we do have a set of rules that allowed somewhere close to 50%, maybe even 60% of our reconciliations to be auto-reconciled to where we didn't have to touch them. These are for things where, like, the GL balance matches the subledger, or the balance was 0 and there was no activity. And so there was a subset of rules that basically allowed a lot of our reconciliations to be closed, if you will, without actually having to go review and check them. And then I think I'm supposed to turn it back over to Hanny for questions. Is that correct?
Sure. Well, let me kind of cover a few more things here. So from an ARCS perspective, so again, our source of data was Oracle EBS, and that's GL and subledgers. There were transactions from P2 that were posted into EBS that were pulled out as well. So it was, and we imported those balances and transactions on an automatic basis, on a nightly basis. So, once subledgers were closed, we pull that data, pipe it across the GL, and that would reload on a nightly basis. From an ARCS perspective, we customized the rules to do the auto reconciliation, auto matching on the transaction matching and the rec compliance. So from transaction matching, you're comparing accounts payable and accounts receivable items to do the intercompany matching. And so it would look at the posting dates and the amounts and confirm the exact matches and provide suggestions for the ones that fell within thresholds. And then it would give you a list of the things that were out that did not match that you can manually take action on. And that significantly reduced the amount of time it took to reconcile those AP/AR transactions. We did do the real-time metrics into the actual workflow process directly through the web. So you log in, click on your compliance dashboard, and see exactly where everybody is. So bottlenecks are identified right away. Issues with users that are out on PTO that need to get their recs closed. You can see that from a reconciliation perspective, I think Noble was able to go down. In the past, they were more summarized reconciliations and able to go down on a more granular basis. From a project perspective, we were on time and on budget, so it was roughly a 12-week implementation, 60% auto-rec, which again, that gave about 30% time savings. The keys, that takeaways that I saw really were that the users were excited about using the application. And they see the value was in it. They weren't like, oh, I want to go back to Excel. That's what I'm used to. They really saw that it provides value. It provides time savings, and it's really worth to use it. Dashboards are really intuitive, and then the real-time metrics were huge from a visibility perspective. And so from a Q&A perspective, if you guys have any questions, please feel free to type them in the chat box, and we'll go through and answer those questions.
Thanks, Hanny. So as Hanny mentioned, we're going to start the Q&A portion of today's event. So just a reminder how to do that. Some of you have already started asking your questions, which is great. But for those of you who have not yet, you should notice there's a Q&A tab in the lower left-hand corner of your screen. This is actually where you type your question. And feel free to ask a question of Hanny or Tim or Matt or Joel. Everyone on the call today is more than happy to lend their expertise and answer your questions pertaining to their experience with ARCS. So at this point in time, we do have a few that came in already. So we'll go ahead and start with those. And Hanny, this one is probably best for you because it's a deployment question. How fast can Oracle Account Reconciliation Cloud Service be deployed?
And so from a deployment perspective, once you license the application, the actual ARCS environment is deployed immediately. So right away from day one, you essentially get your ARCS environment. From an implementation perspective, I hate to give that consulting answer, but it really just depends on what you're looking to do, how many source systems you're bringing in. I'd say an average implementation is probably 8 to 10 weeks, but it really just depends on number of source systems, number of reconciliations, what your process looks like, and there's a lot of variables that go into that. For Noble Energy, with transaction matching and rec compliance, we were at about 12 weeks through the holidays. And that was deployed on time and on budget.
Thank you, Hanny. We have another one here, Hanny, that looks like this might be a good one for you as well. How can I integrate Oracle Account Reconciliation Cloud Service with my existing cloud or on-premise ERP systems?
So the Oracle ARCS application, if you guys are familiar with the legacy FDMEE on-premise application, that application is also part of the cloud offering. It's just rebranded as data management. And data management allows you to identify your source systems, create an integration back to those source systems where you're defining things like, the format of your data files. You generate a flat file, you'd identify what the format is, essentially what are the columns and what each of the columns are and how it maps into your application. We give capabilities where you can create a drill-through URL and you parameterize that URL so that it actually brings back the actual transaction that you're loading in. And so, again, it's a flat file-based integration. If you're looking at a cloud ERP application, that is application. There's no files. It's a direct connection to those. But if you're looking at an on-premise app, it's a flat file integration through data management into the ARCS application.
Thanks, Hanny. Tim, it looks like we have a question here for you. This is from Brad. Brad would like to know how upgrades and patches are handled.
Sure. So as Joel and and Matt mentioned earlier, the upgrades are definitely handled by Oracle, of course, on our side, and I think Hanny touched on the fact that there's a maintenance window. And so the upgrade happens automatically. With our deployments, we always have at minimum a test system and a production system. You don't pay extras. Both of those are included, and some customers even have more than that if they need other environments. But the typical routine is the first Friday of every month we update test systems, and the third Friday of every month we update production systems. And that's really across the board. I have a lot of customers we talk to about that during implementation, or of course before they subscribe, and they're wondering how that works. And a lot of customers, the question is, well, what if it's year end? What if it's quarter end? I don't want changes, things like that. So there's a couple points to that. The first point is we're very cautious introducing new features. We don't put features in necessarily that will force you to use them. You activate them and you have time to test them and things like that. So that's the first thing, is we're very aware of that model. And the second is once customers do get used to this routine, we find that very few want to pause those updates. In fact, it's good to stay up to date every month. Get your update. They're not big changes from that perspective that way. If you think about a typical on-premise environment of the past, maybe you're upgrading every 2 or 3 years, and yes, it's a big deal when you do that every 2 or 3 years because there's a lot of change happens in 2 or 3 years. But with the cloud model, having the updates, smaller ones over the course of every month, then changes are introduced, and obviously, like I said, you can take advantage of them when you're ready. And the other big advantage of that is all customers are getting their updates the first Friday of every month on their test systems. So you have the whole universe of your peers testing the environment and obviously checking out new features, and I get a lot of great feedback that way. So rest be assured that issues are definitely, if there is any, I can find them right away and make sure that there's no issues rolling into production. So it's a great way to roll out the updates, and a lot of great feedback from customers on that.
Thank you, Tim. And we have a question here from Jane. She wants to know, is there full parity with Account Reconciliation Manager?
I could take that one, yeah. So Account Reconciliation Manager, just for anyone that doesn't know, we've had an Oracle Account Reconciliation offering for probably 7-8 years now. It was first offered on-premise. That's the name that Susan just mentioned, Account Reconciliation Manager, or ARM. And the cloud version of that, I guess you could say, is ARCS, the Account Reconciliation Cloud Service. So around 3 years ago, we transitioned to the cloud offering. There's a lot of customers using both now. Of course, on-premise was popular in the past, and cloud is very popular now. So a lot of customers using both of those products. And when we offered Account Reconciliation Manager in the cloud, we basically took the same product, and it was cloud ready already, since it was already a thin app, and we have continued to enhance it since we released it in the cloud. So when someone asks me if it's at parity, I usually say that no, ARCS is actually more advanced because we can update every month. We have a lot more flexibility in the things that we can, and the toolkits we have the advantage of using in the cloud. So I would say ARCS is more advanced than ARM at this point in the product's lifecycle.
Thank you, Tim. We've got a question
and
here.
If I can,
oh, sure,
Susan,
go ahead.
if I can add as well, from a transaction matching perspective, that only resides in the ARCS application as well, and so that's something that doesn't go back to the ARM.
I've got a question here from Brenda. Brenda would like to know, and it looks like this is for you probably, Joel and Matt, what other cloud products were considered?
As far as I can recall, ARCS was the first and only one that we actually did a full RFP or vendor selection process on. Matt will keep me honest if that's not the case.
Yeah, basically we had a list of requirements, and we wanted to have a tool that met certain things like being able to group accounts and being able to pull balances automatically and being able to check for completeness. And of course, this tool seemed to meet those requirements, and that's the one that we went with.
Yeah, this is Tim. If I could just add to that, guys, I think one of the things I see across our customer base, it really is almost like a 50-50 split. I'll see customers just like Noble that have a certain pain point with account reconciliations, and that's their first venture into the cloud, and obviously, as you can see, some success with that. Other customers, back to one of my previous slides, they really look at the whole financial close as a problem that needs to be solved, and realize that Oracle and your total cost of ownership across all those solutions is an option as well. So it's kind of a split I see there. And Hanny, you've done a lot of implementations. You can comment too probably, but it seems like some customers will sign up for that quick win on ARCS, and that's what they'll start with. Others will look for a full cloud transformation. That's fantastic as well. But those are really the two buckets I see people falling in.
Right, and just to add to that, so the beauty of these applications are they are a fully integrated suite of products, but you can deploy them on a one-by-one basis. So you can start out with ARCS and then move into FCCS to do your task management and your consolidations, and then EPRCS for XBRL tagging and SEC filings. And so they are fully integrated, and again, you can on a phased deployment as well.
Thank you, Hanny. We've got a question here from Sanjita. Sanjita would like to know, how does reconciliation work for intercompany for AP and AR?
I can take that one. And so the intercompany AP AR was built in the transaction matching module of the application. And so we had a file that had all the AP and AR transactions in it. And we create some auto matching rules that would look through the file and look for balances and transaction dates and document numbers to match those transactions. Again, when it goes through that process, it gives you an exact match. It gives you suggested matches that essentially fall within thresholds. And then the ones that don't match will need some type of manual kind of user intervention to go through and actually match those manually.
Thank you, Hanny. Sridhar has a question. How good are the reporting capabilities of the tool? For example, is there an amortization schedule built into the tool that we can use to generate reports of pending amortization?
Absolutely. So on a reconciliation basis, when you're going in and entering your reconciling items, you can create those amortization schedules directly in the application. And there's native tools to go through and run reports to pull out what those amortization schedules are. So you can do amortizing as well as crediting as well in the application. And then from a report perspective, you can any object entered in the application, whether it be an account or the company or an attribute that you're tracking or a user, can be pulled through on a query. It really is a point-and-click type creation to pull that information out. There are some seeded reports that you get with the application to look at things like balances and compliance and, by org unit, by company, by account, by reconciliation. Those are all seeded reports. And then we can go through and extend those reports to create any additional information that you need to report out of.
And I'll add on, we actually had that same requirement to create a custom report, and it's essentially embedded a BI Publisher reporting engine, and just like Hanny said, point click. I think we had our report done in half an hour using existing data model there. So we were very impressed and pleased with the reporting capabilities.
I've got a couple of questions here from Srinivas. Srinivas would like to know two parts. One, how many sources did you have pulling the data? And question two is, how did the system handle multi-currencies?
How many sources? That may be more of a technical question. I guess from a functional standpoint, we have one source, which is EBS, General Ledger, and Subledger. And then those were specifically split across 6 locations to facilitate all of our drill backs. Like Hanny mentioned, it's kind of flat file based, so each of those had to be parameterized slightly differently. So in the end, we have 6 quote-unquote sources, if that answers the question. And then, Susan, can you remind me of part 2 of that question?
Yeah. Part 2 was how did the system handle multi-currencies?
Well, I guess it can handle it two ways. The official multi-currency would be loading both local currency and having, just loading the local currency as well as your conversion rates and having ARCS do the conversion calculation. This added some extract overhead that we didn't want to introduce. So we went with the second option, which is just loading the local currency as well as the translated amount from Oracle. And it essentially will, just create a multi-column reconciliation that essentially is pretty intuitive. So FDM recognizes that the currency code passed is different. We'll split it out into a second column, and it's almost plug and play from there.
Thank you. So we've got a question here from Larry. Larry says, one of our challenges is bank account reconciliations, specifically generating entries for bank-originated TXNS. I'm sorry, I'm not sure what that is, and related matching, cash clearing journal entries, and truing up FX gain and loss. We have approximately 500 bank accounts. Now, see, that would have helped. TXNS is transactions, huh?
Yes, that's right. Yeah, this is Tim. I can take that one. So you get tired of typing transactions the long way every time. I know exactly how he feels.
Sorry about that, Larry.
So Larry, this is Tim. For that one, we can post out to the ledger anything we load. There's kind of 2 ways to look at that. The first thing is if you're loading in a typical bank rec, you have a GL source and a bank source. We also offer multiple match processes or really unlimited data sources if you have to have certain legs in between. For example, some customers will load GL, match that to a point-of-sale system, and then the point-of-sale system will match to the bank. I also have seen GL to accounts receivable to the bank, and so on, credit card processors, right? There's all these different sources involved on a lot of these different recs. So depending how many ways your reconciliation needs to be, how many sources you're going to load, there's a lot of adjustments that come from that. So the first thing that we extract out and make sure we post are the adjustments. So anything we find that is a variance or adjustment needed between those sources, we can post. And the other thing that you mentioned is just the source activity itself. So we can extract that and post it as well. Because, and Hanny touched on this earlier, anything that we load in, we can certainly turn around, back out, and post. So I hope that answers your question, because I think you were kind of touching on all these different sources and different things need to get updated. So that's typically how customers will handle that.
Thank you, Tim. So Anuj would like to know, can single reconciliation be configured to contain some balance of multiple chart fields combinations so that one user can approve multiple combos at once?
Yeah.
Go ahead, sir.
Go ahead.
Yeah, I was just going to mention this one because previously you talked about local and a reporting bucket. There are up to 3. Typically, they're configured as entered or transactional currency. That's the currency that the transaction occurred in. The local currency is that, or functional currency, some people call it, is that second bucket. And then the reporting currency or global currency is the third. So yeah, you can bring in what you need there. As the Noble team mentioned, they're bringing in 2. Some customers that are U.S.-based entities only will bring in 1. It's really up to you how you configure that. If you do have multiple currencies, I always recommend bringing in the reporting and functional currencies at least, because then you can always track the difference between them and make sure they're both obviously reconciled. But yes, if you want to combine across account code combinations, create what we call a group reconciliation, that definitely saves a lot of time, because then you're not doing a lot of individual reconciliations. You're creating a single reconciliation which has multiple balances rolled into it, and you can see that detail. You can always drill through and see what balances make up that rec, but at the end of the day, that single group of balances goes through one workflow, so one preparation and one review, or however many reviewers you like, and that does save a lot of time at the end of the day, typically from the manual reconciliation. I'm sorry, Joel, I don't know if you had anything to add to that.
This is Matt. I'm just going
to just
elaborate on that a little. With the grouping of the reconciliations, there's two different ways that we've been grouping the reconciliations. The first way is called data mapping, where basically we're rolling the entire balances for selected accounts all into one balance, and it treats it as one reconciliation. And then there's also a way where we did the summary reconciliations where they're not mapped into one balance per se, but you can see each account listed on what's called a summary profile. And so you can see each balance and reconcile it that way. So there's two different ways, one data mapping and one doing the summary profiles.
Thanks for adding to that, Matt. We've got quite a few more questions here, and just at this time, since we have so many that have come in, I want to let you all know that if we don't have an opportunity to answer your questions, we certainly will address them post-event. So someone will be following up with you. So don't be discouraged if we don't get to your question. Please feel free to ask as many as you like, and we'll have someone follow up with you. John has got a question here, and it looks like this is for Matt and Joel. It says, does Noble use primary and secondary ledgers? If so, how is this incorporated into the ARCS solution?
This is Matt. Right now we're using primary ledgers for most of our accounts. So we actually consolidate into what's called a consolidated ledger. And so we're pulling balances and transactions from there. But then for the accounts where we are also pulling in foreign currencies, we're using the secondary ledgers for those balances.
Perfect. Thank you for that. So I've got a question here from Shadar. For automated data integration, do you need FDME on-premise?
You do not. You know, for Noble Energy, we were able to use data management, and so Joel and his team, Joel's the team lead on the Noble side. So they were able to generate the files that we need and created a scheduling to export those files, and then ARCS was going to pick those up through data management and pipe those directly into the application. That was a lights out automation, so you do not need it FDME on-premise for that.
Thank you, Hanny. So I've got a question here from Shari. She says, does the workflow use enterprise component or something else in ARCS?
It's probably for me. I'm not familiar with the term enterprise component, but the workflow that we use is a common workflow tool or engine that's in the EPM platform. We use it for our closed task manager as well, and some other places where we have we need the flexibility of workflow and all the things that go with that. So it's something that's built into our EPM platform, I think, is the answer there.
Shari also has a second question here. Do you have templates for each reconciliation type, and can the rules be set up account type?
I can take that one. So from a reconciliation perspective, each reconciliation does have an actual template. So you start out with what we call a format, and there are pre-delivered formats in the application. The reconciliations will be assigned to each of the formats, and the format essentially kind of lays out the columns of information that you're going to have in the application. So if it's a AR subledger balance, you're going to see GL and AR subledger. So that essentially lays out how the actual reconciliation works. So you start out with an overarching format. The reconciliation templates are assigned to that format, and they get created on a monthly basis. You do assign time periods, so you have monthly, quarterly, yearly recs that you would create, and so they would create based on the time period that you have assigned to each of those recs.
Thank you, Hanny. So we've got another question here. This is from Sam. Sam would like to know, how does the drill back into Subledger work?
I can take that one. I think Joel alluded to this earlier. What we did in data management, we created a subledger file, and we essentially had one file for each of the different subledgers. So AP, AR, fixed assets, cash. And those files, so we created a location in data management where we pulled that information in. For each of those locations, we created a drill through URL. as part of that URL, we had to parameterize specific functions on that URL, things like the CCID that you would need, the set of books, the ledger, the function ID, the specific things that you need to pass so that it knows what transactions to pull back in the actual application. And so, we worked with Joel and his team to identify what those are, pass that information across in the file so we can parameterize it and push it back in so that, from a reconciliation, you would click on Subledger, you'd see a list of all the transactions, and then from there would drill into that actual Subledger transaction in EBS.
Thank you, Hanny. Got a question here from Susan. Susan would like to know, she says her company is implementing Oracle AP. We've heard that Oracle AP can create amortization schedules for prepaid accounts and record accruals. Do these activities transfer automatically into the ARCS module?
Yes. I mean, I don't know about automatically, but whatever journal entries those recurring vouchers are going to create, whenever you pull your GL, those will be included.
Thank you, Tim. And we have another intercompany reconciliation question here. This is from Shari, and I'm not sure if this one has already been asked and answered in a different way, but she wants to know, with the intercompany reconciliations, are you reconciling to a specific chart fields or between modules such as AR and AP?
So we're reconciling based on the relationship. So the AR segment from one company to the AP segment of the intercompany segment. And so, yeah, it's per relationship.
That's great. We are almost at the top of the hour, so I'm going to close Q&A for the day, but please feel free to continue to ask your questions if you like. And like I said, we absolutely will address your questions after the event. I did want to make mention that Perficient will be exhibiting at Collaborate, so if you happen to be heading to Las Vegas here really soon, it's less than a week away now. It starts on April 22nd. Please do stop by our booth and have an opportunity to meet any of our team members from the EPM practice that will be there. We will have members from our BI practice there, as well as members from our ERP practice too. We have 7 sessions that we're delivering at the show, so please do look us up. Stop by the booth. We'd love to see you. Last thing that I want to mention before we close today's event is if you haven't had an opportunity yet to see the Perficient blog, specifically the Oracle blog, please do check it out. Our subject matter experts are always posting new content out there. There's really good valuable content that I think you'll derive a lot of knowledge from. So check it out if you haven't had an opportunity to do that yet. But I encourage you to follow our Insights tab on our main website, perficient.com, where we have additional blogs that you can look at, white papers, upcoming webinars. And before I close today's event, I want to mention that we do have something coming up in Houston. It's actually an Oracle Analytics Cloud event. So if you are local to the Houston area and you're interested in a little bit more about that event, it's actually going to be an Oaks workshop that we're hosting there in Houston. So please do reach out via the chat window there and let us know if you're interested. So we would love to have you attend that. It's co-hosted by Oracle and Perficient. And with that, I'm going to go ahead and close today's event. Thank you so much to our speakers, Matt and Joel from Noble Energy. We greatly appreciate your time and effort that you gave to us today and sharing your knowledge about your environment. Tim, thank you so much for joining us from Oracle. And of course, Hanny, as always, thank you for sharing your expertise. We do hope to see you online in the future, and please do stop by and visit us at Collaborate again if you're going to attend. Thank you.